Imagine you tap your card at the servo to grab a Dare iced coffee and a meat pie. Card declines. You tap again. Declines again. There is a bloke behind you with a trolley full of groceries watching the whole thing. You are doing mental arithmetic you cannot finish fast enough. Did the rent clear? Did that direct debit come out early? And the card is still sitting there. Not working. That is what being at the bottom of the banking system actually feels like in Australia. Not dramatic, not cinematic, just a declined card at the servo while someone waits behind you. But here is the thing most Australians never talk about. The bank you are dealing with in that moment is not the same bank that exists for someone else with a different balance. Same logo, same branches, same app, completely different institution. And in this video, we are going to walk through every level of how Australian banks actually treat you based on your money. Because the gap between the bottom and the top is genuinely something else. Let us start at the bottom. Level 1. Your account is in the red. You are overdrawn. Maybe by $20, maybe by $200. In Australia, the big four banks have faced serious heat over this. ASIC, the corporate watchdog, released a report in July 2025 confirming that ANZ, CommBank, Westpac and Bendigo Bank had been slugging low-income Australians with excessive fees on transaction accounts. Over 2 million Australians on Centrelink payments were stuck in high-fee accounts they did not need to be in. The total bill? The banks were forced to refund more than $93 million to over 920,000 customers. Think about that. Nearly 1 million Australians being charged fees they should never have been paying. And it took ASIC stepping in to force the refunds. CommBank, for the record, refused to extend refunds beyond the initial cohort despite charging around $270 million in fees to 2 million low-income customers over 5 years. NAB, Macquarie and Ing had already scrapped those fees entirely. So the experience of being broke and banking in Australia depends heavily on which bank you picked. At this level, the system does not know your name. It does not know your rent was 2 days late because your employer stuffed up the payroll run. It just sees a negative balance and responds accordingly. You are not a customer here. You are a cost. Level 2. You are not overdrawn, but you are not comfortable either. You have got a few $100 in the account, sometimes more before the bills hit, and then it drops again. The monthly account keeping fee arrives automatically. Some banks still charge $5 to $15 a month unless you meet conditions like minimum deposits or balances. NAB is actually the only Big Four bank right now with a no-fee everyday account, no strings attached. The others have conditions attached to their fee waivers. Your savings account is earning close to nothing. While you are sitting on a balance earning 0.01%, the same bank is lending your money to someone else at 6, 7, 8% on a home loan. The spread between what they pay you and what they earn from your money is how banking profits work. At your balance, you are simply not worth competing for. You try for a credit card. You might get a secured card, which means you hand the bank your own money as collateral so they can lend it back to you and charge you interest on it. That is not a joke. That is genuinely how it works. And it is how credit gets built from the bottom of the ladder. The service is not rude, it is just indifferent. The app works, the teller is polite. And if you call with a problem, you wait on hold and eventually get someone reading from a script. There is no relationship here. There is a transaction. Level 3. The paycheck is reliable. Something shifts. You land a solid job, or the one you had starts paying properly. Your direct deposit is hitting $3,500 or $4,000 a month like clockwork. The bank notices, not with a phone call, not with a congratulations. It notices algorithmically. Your account pattern has changed from irregular and low to stable and consistent. Suddenly, the credit card offers show up. Real ones, with actual limits of 2 or 3 grand. The interest rates are still up around 20 to 22% because your credit history is short, but the door is open. The institution that had nothing for you 6 months ago is now sending you stuff in the app. You apply for a personal loan. 5 grand for a car repair or a move. It gets approved in a couple of days. The rate is not great, but it is workable. And for the first time, the banking system functions the way it is supposed to function. You needed something, you applied, and it worked. The monthly fees have probably disappeared because your direct deposit now triggers the waiver. That feels like a bigger deal than it should, because you are paying them long enough to notice their absence. You are a customer now, recognized and serviceable. The bank wants to keep you because you are generating revenue. You matter to them the way any customer matters to a business, which is to say, you matter as long as you are spending. Level 4. You are actually building something. The savings account has 15 or 20 grand in it. The investment account is growing. The credit card gets paid off every month, so the interest rate is irrelevant. You have built, through boring consistency over a few ordinary years, a financial profile that looks genuinely different to the bank's systems. The credit limit starts going up without you asking for it. The bank is extending you more because you have proven you do not need it. Loan rates get better. The car loan that was 11% last time might be 7 or 8% now. Not because they like you more as a person, but because your history has shifted the risk calculation in your favor. More capital stays in your hands. Better rates mean less going to the bank. Less going to the bank means more compounding in your corner. The system starts tilting, quietly and slowly, in your direction. Level 5. 6 figures saved, assets building. Combined savings and investments north of $150,000. You are not rich by Australian standards, but you are in the top tier of what most retail banks see on any given day. The phone queue is different now. Priority hold times. The person who picks up has more authority to waive fees, fix problems, and approve things without escalating. When something goes wrong, and it always does eventually, the resolution is faster because the person handling it actually has the tools to resolve it. A dedicated banker might get assigned. Someone who emails you directly, knows your account, and checks in occasionally. The access is real, even if the relationship is commercial. They are attentive because their performance is partly measured on retaining accounts at your level. Level 6. High net worth. The rules change. The definition varies by institution, but private banking in Australia generally starts around $2 to $3 million in investable assets. ANZ Private requires $3 million. NAB Private Wealth is $3 million. Westpac Private Bank starts at $5 million. CommBank Private sits somewhere around $2.5 million. At this level, the bank stops being a place you go and becomes a service that comes to you. Wealth management is offered. Investment advisory, tax strategy, estate planning, all coordinated through a single relationship. The conversations change texture entirely. You are not being sold products. You are being consulted. Loan approvals are faster. Paperwork is lighter. Rates are meaningfully better. If something goes sideways with a wire transfer or a fraud alert freezes an account you need access to right now, the problem gets resolved in the same phone call. No scripts. No escalations. Someone with actual authority handles it because your account warrants that response. Level 7. $5 million and above. A different institution inside the same building. Products that are not on the website. Rates that are not published. access to investments that require wholesale investor status. The mortgage rate on offer is not the rate you would see on a comparison site. It is negotiated, not printed. Your advisor is a specialist, or a team of them. One for investments, one for tax strategy, one for estate structures. They coordinate. They meet with you. They know what you are building and what you are protecting. The system that was automated and indifferent when you were overdrawn is now human, attentive, and oriented toward yes. And that is the uncomfortable truth about Australian banking. It is not one system. It is 8 different systems, stacked on top of each other, all wearing the same logo. The rules, the rates, the service, the access, the entire experience, all of it changes based on your balance. Which level are you at? And more importantly, which level are you working toward? Subscribe to Money Made Australia for more honest breakdowns of how money actually works in this country. And comment below with which level you think most Australians are stuck at. Because I reckon the answers will surprise you.